I'm Jason Baldesare, Head of Solution Strategy for FIS Capital Markets, and I'm joined by two of my colleagues, John Pizzi, Head of Innovation and Strategic Partnerships, and Harry Stahl is an Enterprise Solutions Strategist. And we're going to talk today about innovation and macroeconomic trends. We're going to do a little look back on 2023 and do some predictions for 2024. So I'm really looking forward to this discussion. I'll let you guys introduce yourselves to the audience here in a little bit more detail.
I run our innovation and strategic partnerships team. So I look at most of the horizontal technology that's influencing the industry, and I work with the likes of Amazon and Microsoft and Google and Snowflake and IBM and others. They're rich partners of ours. We've worked with all of them for a long time, and we bring that horizontal technology into the FIS financial services solution set, and work closely with them in the market.
Yeah, hi, Harry Stahl. I'm part of the solution strategy team here, where, among other things, I look after the RegTech strategy across the capital markets portfolio, and also work with various parts of the business, thinking about where we should be investing internally and also partnering with the external world to create the best solutions for our customers. Very happy to be here.
And thanks, guys. So rewind a year ago, we did the first in our series talking about 2022 and what we thought we were going to see in 2023. A big focus of that discussion was on cloud and as a service technology. I think we were pretty spot on in terms of some of our predictions and the focus of that as we looked into 2023 at the time. And I know, John, you're gonna touch on that a little bit more in a second. A big part of our discussion was also around the macroeconomic conditions, what's happening in the market, the political landscape and how that was impacting things from a technology perspective and just an overall market perspective. I think what we saw there is a mix of a little bit of everything, right? We certainly, I don't think we did any, if I remember correctly, we didn't do any interest rate predictions. But we certainly talked about the impact of those and how they were going to impact our client base. We touched on AI, ML, and how that technology was going to impact things in financial services and across the capital markets. I don't think we could have predicted how fast that was going to move, and I know we're going to talk about that more later too. But if you think about the macroeconomic headwinds over the last 12 months, it's one of the really cool things that we get to do in our job, right, as part of being at a great company like FIS and in the capital markets business, is we have such a tremendous cross-section of clients, from traditional buy and sell side firms to non-financial institutions like corporates and insurance firms. So we get to see how things like interest rates and volatility in the market impact clients across a wide spectrum. And for some of our clients, rising interest rates is great. For some of them, volatility is really good. For others, it decreases their business and it creates other pressures, and it makes strategic initiatives harder to lock in on and make decisions. So I think you really see a cross section, and I think we're going to touch on some of that as we go through the discussion today on just how these things. There are certain things that cut across the entirety of our client base, but there are also things that kind of hone in on certain areas depending on the market or the business, or buyer versus sell side, et cetera. When we talked last year, we weren't prognosticating bank failures, right? I don't think it even came up, and I'm not sure we talked about it at all. But obviously that was a big event here in the U.S. this year with Signature and Silicon Valley banks. And Harry, being head of our RegTech strategy, is going to talk a little bit more about what that means. But I think it's very safe to say that there's going to be more regulation coming in 2024 around capital and liquidity requirements for banks that have $100 billion or more in assets. I feel pretty comfortable predicting that. And then they've got in Europe, which arguably is a little bit ahead of the game because of some of the regulatory requirements that they have there. But we're seeing further expansion. So as they kind of move faster, what does that mean for the rest of the world in terms of catching up, and how other geographies and other jurisdictions implement similar types of things that Europe might be a little bit ahead of the game on. The other thing I think we're seeing is a convergence of the buy and sell sides. And this is something that's been on our radar for a little while. We start to see buy side firms now moving into self-clearing and offering things like securities lending and repo, which are traditionally sell side sort of activities. And then we see sell side firms doing more investment management type functions and research and wealth management type things that we typically haven't seen in the past, right? So I think you're starting to see a blurring of those lines. And again, I think it puts us in a really interesting position, given that we service all of those markets with technology solutions, to be able to help our clients understand what that means as we bring together solutions and platforms to service what may look more like combined buy and sell side in some cases, in the years to come. The last piece here in my intro, just kind of reflecting and then looking ahead. We talked about AI and machine learning and the impacts of those technologies and where they were at the time, and how it had moved from PowerPoint slides talking about conceptual ideas to actually having things in production and starting to see the impacts. But then this generative AI stuff started to really explode. And I don't even know if we talked about that last year, John, to be honest with you. But ChatGPT, 100 million users in 2 months, I think. And just kind of comparing that to some other really fast-growing emerging technologies over the last couple of years. It took TikTok, 9 months to get to that mark, and it took Netflix 2 years to get 100 million users. So, it's just really amazing to see how that's exploded from a usage and a pace of the technology for us. And I won't steal your thunder, John, because it's a good transition into your section here. But seeing how we actually take that technology and apply it to real world capital markets or financial services challenges, right, is going to be really interesting. And can we, I say, we as a company, our clients, can we move as fast as that technology is moving? I think it'll be really interesting to see how that plays out in 2024 and beyond. So with that being said, why don't you take over, John, and talk a little bit about AI and cloud and some of the other stuff that you're seeing, and some of the things that you want to talk about in terms of what we might expect to see in 2024 and beyond.
Yeah, so I think we take a few steps back and we look at 2023. As you said, we were right about cloud and software as a service, and I think the industry trends around moving in that direction are real. Customers want innovation at a faster pace. It's easier to get that in a managed service in a software as a service environment where technology providers can be dealing with less instances of software, and therefore able to focus on features and functions and bringing functionality to bear that customers want. So I think that trend we were right on. Digitalization kind of went hand in hand with that. The customer experience evolving with sort of quick analytics tools, and we saw Google Looker, Amazon QuickSight emerge as faster ways, easier ways to analyze data and present information in those digital experiences. So I think we were right there. There are like 4 topics that we weren't necessarily wrong with, but I don't think they emerged the way that we thought. I thought data enrichment was going to be a bigger deal, meaning people taking information, bringing it together, data being monetized, data being used in aggregate. But that one's slow rolled in the market a little bit. I think people realize it's hard, right? There's IP issues, there's legal issues, it's difficult, contractual issues to bring those things together. But I do think that's an area where we're going to see some path forward. Because maybe it's in RegTech, maybe it's in ESG, but I think that's an area where we're going to see combined data be more powerful than individual data. But we didn't see that in 2023, maybe to the extent that I thought. ESG too, right? I think we've seen a lot of regulatory activity, collection activity. I think the market's still trying to figure out what the industry around ESG is, and I know Harry's going to talk more about this. We've got some points of view on it. Web3 tokenization. I think both of those topics are long fuse topics in the market. They're going to take time, but as you said, I mean, the big bomb dropped in the early part of the year with generative AI, and we saw all the big cloud providers basically jump in, and it's different, right? We used to talk about AI, about building models and creating applications, and I think the market's learned that creating a model and managing a model is a lot of work, and it requires really rich skills, right? You've got to have strong data scientists. You've got to work on those models. You got to keep curating them, keep cultivating in order to do that and be effective with it. And it's not easy. And then we see the big cloud providers drop in generative AI, which they've all been working on for decades, right? And you think about how much information they've collected over time, and how rich those models have gotten, the large language models. And all of a sudden now you see things like, some of the most interesting stuff I think right now isn't application development necessarily, but productivity. To see something like Copilot for GitHub, right, where Microsoft's taking the coding environment and adding AI, much the same way that they added it to Outlook, right? And so it's predicting the next words in your sentence in your email and helping you write those emails faster. Well, it's doing the same thing in code. And the productivity gains that come from that are massive. And those are bottom line savings, right? Or they're innovation focused, right? That time back is more time that can be spent on creating new features and functions by these developers. That ripples into quality assurance, that ripples into delivery and professional services. And so all of a sudden you're getting really powerful efficiency gains, productivity gains as an organization from generative AI. And then you see kind of the Amazon model with multiple models and a marketplace of models. And so all of a sudden you've got innovation in the marketplace happening around these models that are highly trained, and an organization doesn't need necessarily to focus on building their own model, but rather picking and selecting from what's in the market. And those are big shifts, right? And I think what it does is it makes AI accessible all of a sudden, right? So something that was very, very hard to do, took a long time, high skill sets, no one's got a ton of commercial experience with it. Now all of a sudden the hard stuff's done for you, and you're just using the AI. And maybe you're using that AI to sift through documents and gather information, or to create images, or you're using it to build and run an application, or like I said, for productivity stuff. But I think that transformational moment for companies is coming around that AI. And so I think that's a really big one. It's hard to overlook that as the big topic of 2023, and it's going to carry into 2024. And I think you're going to see a lot of amplification of that. And I think with that, two other topics, and I turn this back over to you, Jason and Harry, but access to data. I think that's a big one. You had the cloud focus, managed service solutions becoming more and more prevalent. And I think what that does is it creates an opportunity for people to start to put data into environments where you can report on it, access it, analyze it. It's a natural byproduct of moving solutions to the cloud and moving solutions into a managed service. And that hopefully helps that data enrichment process by making, again, data more accessible. Now you can start to do more things with it. But I also think it opens up the concept of enterprise data sharing. And for me, aside from the Gen AI, I think that's a big trend for 2024. We live in a financial world where we're still moving data in some cases through paper, through FTP, through APIs, through batch processes, and everybody's got systems of various ages and heritage, right? So, modernizing all those things and just making all of those processes go away is impossible across the industry. But the concept of data sharing, the idea that data sits in one place but becomes accessible, is I think it's simple, but I think it's powerful. If you're an on-premise client, for example, and all of a sudden vendor can offer you a managed service, but access to your data in the same way you had it before, so all the reporting infrastructure and all the work that you did, you still benefit from it, but now you don't have to care for the data, and the application can sit in a managed service where it's going to be more more evolved and get features and functionality faster, you're better off as a big company. And then as a smaller company, you're now getting the benefit of that data and all of those analytics services that just the larger clients were getting. So I think that's a big deal. And then it's also a big deal from the standpoint that as data gets created, data gets shaped. So for example, if a vendor's using Snowflake and a client's using Snowflake in this example, data can just sit. Applications can actually move from environment to environment. And I think this has big implications, particularly in the regulatory space, where you might grab data from one place as a source, but then the outputs of that data you don't want to give back. You want to keep those on your side because they're proprietary to you and the things that you're doing. And then that pattern follows with other data sources and other upstream and downstream partners. But the efficiency in not moving that data, all the costs and the effort around that, I think a lot of innovation comes out of that in combination with the generative AI. So those are my raw thoughts on kind of where last year shaped up, and then what 2024 might hold in terms of some of these bigger horizontal technology trends.
Yeah, I think I really love that term, enterprise data sharing. It's not to say that things like master data management and enterprise data management, or I don't think we're suggesting that those are going to be stripped from the dictionaries, but this is really where we're headed, right? I think into this mode, and it's exciting for us as a technology provider to so many different clients, because as you said, our clients are asking for access to this data. We've never been better positioned to be able to give it to them, and then in turn they can give it to their customers, right? Which are the ones that are asking for it, which is why they're asking us for it. But it feels so much more real. I think like it's so exciting because we've seen it, and you put your hands on it. We're starting to see the practical application of this stuff, and just the speed to market is, I think, another one that is something I'm really excited about. The ability to develop more efficiently, get things in the hands of our clients faster again, so they can put them in the hands of their customers faster. It's really exciting. Awesome. Well, thanks for that, Harry. Last but not least, let's talk about RegTech. Touched on that a little bit in my intro, and then John talked about it there at the end, and then a little bit more on this concept of what we're thinking around buy and sell side convergence.
You bet. Thanks, Jason. There's a lot moving in the RegTech space, and I'm going to take things not in order of importance, but sort of relating to what you were talking about, John. First, really, AI regulation is on the move very quickly. Talking to risk managers in a webinar a couple of weeks ago, one of them said, if the board of directors is not treating AI as one of the top 5 risks, then they're not paying attention. There's as much risk as there is opportunity. And so it's not to not go forward, but to figure out how to manage that and succeed in getting the benefits without causing too many problems. Some of that is just good risk management and internal work, but some of it is regulation. So the regulators are thinking about these things. Europe has, a draft AI regulation that will be broad and deep, thinking about, safety, security, data privacy, and the social impact of AI. Biden just issued an executive order on AI for the U.S., which addresses a number of those issues square on, and actually on the surface of it, and we'll look at it more closely as we go forward, seems to match largely what the industry is saying that how they choose to self-regulate. So we'll track that quickly as it moves. It's clearly in motion. Related to that, and you already mentioned this, John, as well. It's like data. When you talk about data sharing, GDPR, data security, comes into play. So when you're doing that data sharing, you need to think about those regulations. The model is not just monolithic. It's in this one place. How do I control it? But if it's a federated model and things are moving across boundaries, how do you apply those concepts of privacy and security, and the ability to understand where your data is and opt out of having it used? All of that gets interesting and more complex, and the regulators are trying to grapple with that. Risk you mentioned earlier, Jason. Clearly, macroeconomic factors have have had a big impact. Failures in the U.S. and of course ongoing stuff from the Basel III and Basel IV, Basel Committee work in Europe to address risk, balance sheet risk, liquidity risk, counterparty risk, market risk. All of those factors are really front and center, not just for the risk managers, but for the regulators. And even where there aren't the possibilities, as in the US, of increased capital requirements, enforcement of the existing rules is really where the attention is. Risk managers are responding to homework from the Fed, and that's appropriate, right? We want to see people doing the basic blocking and tackling, and use what's already known to drive some of those risks and problems out of the system. And of course, in the current geopolitical climate, it's no surprise that anti-money laundering, the countering of financing of terrorism, and sanctions are also front and center for enforcement, continue to drive massive penalties and fines, and the corresponding investment in RegTech from financial services firms. There may not be immediate new regulation there, but enforcement is continuing to be important for anybody who's looking at their RegTech spend. ESG is there. Expanding mandates are requiring companies to consider sustainability factors in many processes across financial services on both the buy side and the sell side. So what does greenwashing mean in the buy side? How do you incorporate green covenants or other conditions into your lending process or your balance sheet risk? We're thinking about how to pull together data to determine and calculate climate and transition risk, and helping companies with exactly those problems, because we're thinking about risk management on all those levels, and ESG and climate and transition risk is clearly part of that. It's also worth noting that market-related mandates continue to affect both the sell side and the buy side. In Europe, MiFIR II, MiFID III, EMIR refit is really, they just issued a new set of guidance. It's a few hundred pages of detailed restraint, rules on how to talk about your derivatives trading activity, and AIFMD2 from ESMA for alternative investments. So, the big headlines from the news shouldn't obscure the fact that the basic market-related structural regulations continue to get refined, and people need to respond and work on that. I mean, it's worth noting that there are differences, in how the industry out there is responding to these risks. I mean, according to our latest global innovation report, financial services firms, 55% of them are using RegTech, and that was only 46% for non-financial services firms. So a more highly regulated industry, you just got to use the tools. And thinking about the risks they're facing, fully 83% of financial services respondents see RegTech as a way to manage those risks. There's only 76% for non-financial services. So you see sort of the difference in what we're facing, what our customers are facing is driving more thought and investment by them. There's also lively innovation and investment in and by RegTech providers to solve those challenges. I mean, not just more efficiently, but also smarter. So AI comes in here. Many of them are already leveraging machine learning for things like analytics and processing documents to understand what text is there. But they're starting to bring generative AI to bear, just to streamline processes overall and to generate content more efficiently. So that's clearly, as you said, the bomb just dropped, John. It's moving quickly. It's early days, but there's going to be lots of visibility there, and RegTech firms, I think, are responding to try and use the technologies to mitigate the risks, not generate more.
Yeah.
There's some variations also in RegTech adoption within financial services. I mean, sell side firms have been really moving faster in RegTech update than the buy side. It's not really surprising given their relatively heavier burden. more complex regulations, overlapping jurisdictions, the super high pace of change, and of course the expensive enforcement actions. So sell side moving faster than the buy side. Although they're handling RegTech a little differently, in other ways they're really converging. You mentioned this, Jason. Both buy side and sell side are expanding beyond their traditional core competencies. I mean, it's not a dramatic new event. It's been happening over time, but the cumulative impact of those changes is kind of shifting the landscape. So beyond just investment management, buy-side firms are taking on more of research advisory, software and analytics, even raising capital, as well as risk and transfer liquidity solutions. And they're taking on the role of market maker, liquidity provider, and clearing member, and expanding the footprint of securities lending and borrowing. And similarly, sell-side firms are adding to familiar capital raise, risk transfer, liquidity, and post-trade services, things we've known for years, and providing even more investment management and wealth management and the technologies to support those. So that shifts the fintech landscape where there's, the Venn diagram has a lot of overlap, and it's an interdependent ecosystem. The technology has shifted, so the buy side has direct access to trading and tools for price discovery, trade cost analysis, liquidity management. Makes them less dependent on the traditional sell side provision of those things. And customers are demanding precisely customized solutions, so that pushes the buy side to invest in research, in execution, risk management, and related technologies. So, and in the market where you have electronic trading, algorithmic trading, more market data availability and research more widely available, that has reduced the sort of informational advantage that the sell side traditionally has had. And regulations, of course, with all that pressure on the sell side and slightly less on the buy side, that friction on the sell side makes it a little harder for them to move because they're careful. So all those things combined mean that buy side is expanding, sell side is shifting their focus, and there's much more overlap. And I'd say that we're recognizing these changes internally, and we've organized our buy side and sell side solutions into a single organization because we want to anticipate those needs, sort of the overlapping needs of clients, and respond to them in a robust and nimble way, rather than treating them as silos.
Yeah, thanks, Sarah. It's great. I think it's easy to say at one level, right? But it's so clear as we went through the discussion how data underpins really everything that we touched on, right? And so whether that's as part of RegTech or as part of its involvement around AI technology and cloud technology, whether that's helping these traditional buy and sell side firms offer new products and services and do new things, right? So it's very clear that is a huge focus. And of course, it's easy to say at one level, but I think, again, as we all talked about and gave some very specific examples, it's real, right? I think it feels much more real than it's ever been, with the likes of the big cloud providers and Snowflake and the AI technology. Look, none of us, and I'll give you guys a chance to say any parting thoughts here just in a second, but none of us are going to sit here and talk about, we can't turn a blind eye to everything that's happening in the world and macroeconomically and what's going to happen with rates and inflation. And but I think what 2023 did tell us is that yes, there certainly have been impacts, and our clients and our clients' customers have probably been a little bit slower to make big decisions, but we find a way. And I think the technology has evolved to such a point that, we can do things faster and we can do things with a lower total cost of ownership that, we're not going to see all of this stuff that we just talked about here come to a screeching halt. It's going to continue. If anything, I think it's going to expand in 2024 versus what we saw in 2023. So it's really exciting, right? Because again, we're at a really cool spot in this market to be able to see across the landscape of all of these different things happening and be able to bring together, innovative solutions for our clients and their customers. So really appreciate the discussion. John, Harry, you guys want to close out with anything? Or
looking at that RegTech picture, it's really clear. People think about regulations as a burden, and they do take time and effort to deal with. But what regulators are dealing with is the changes that are happening in the world. And so it's, they're responding to that and trying to codify things. And done well, that will actually simplify things rather than add chaos. And the nice thing about RegTech is if you can apply the right kinds of technology effectively, it can be more efficient to deal with that. So it's worth tracking that.
All this RegTech stuff, Harry, kind of dampening our innovation spirit. Got all these big providers that want to push stuff into the market, and here come the regulators and the IP issues and all the things that we got to deal with. But I think the reality of 2023 was a good year in that it was. I don't know. I feel like we almost have like a pent up demand in the market to go do things that are bolder. And not to say that 2023 wasn't a bold year, but I think the market climate was a little bit different, and I think if we see some of that shift a little bit in 2024 with all these trends, and particularly the Gen AI trend now with the regulators starting to get their heads around it, right? Which I think people's heads almost exploded when that came out. It was like, where are all these models getting this IP, the IP to make these decisions? What do they output? How does this all work? And I think that's become demystified a lot. And if you've seen a lot of collaboration, even just across large companies, right, and their IP and legal teams actually coming together, because I think as an industry we realize that these are topics that we've got to advance. And so, now I think as that starts to the things that are scary start to shrink or get isolated, and real solutions emerge to the liability issues and the things that need to be sorted out. I think we get ourselves in a position where we're corporations, large companies now say, all right, let's go with this in these areas where we feel comfortable, be aggressive. In these other areas, let's proceed with caution, but let's proceed. And then in these certain areas, hey, we need some more time. But I think there's enough activity and enough stuff where you're going to start to see a lot of interaction. And quite honestly, we're already seeing it, right? You're seeing products emerge, and generative AI is part of the product, right, to make the solution work better. But I think you're going to see the gas pedal on that a little bit in 2024, because investment money is going to come into that area, right? I think you've already seen, any company that's got AI attached to it, you've seen a stock appreciation on, right, for better or worse. And so just by that notion, the venture community, the private equity community is going to push into that space. And as that happens, more and more innovation is going to happen, and we're going to see more and more things that are interesting. So
John, Harry, thank you very much for your time.